Welcome. Today is going to be a psychology class of a good mindset to have during huge economic news like FOMC, which I'm going to explain that's happening today. The second thing, I'm going to give some gems on what I've been applying from my advisors and my mentors and how to make the market bias change. The third thing is I'm going to give you what we're watching for the next week, as in what trades we're looking for, what levels we're looking at, giving you exact levels. And I'm also going to give you the mindset shift for next week. So I'm giving you the levels for next week and the mindset for next week to shift into more profitability, and that'll be it. So let's get into the first thing of the psychology class today, and that is going to be what FOMC is. Now, FOMC is a statement that comes out a few times a year, and it just so happens to be coming out on Wednesdays, and today is a Wednesday, and it happened to be scheduled today, which is December 10th. I believe they're every 8 weeks, if I'm not mistaken. The time that it happens really is not significant. The thing that's significant here is that it is a huge economic meeting, and this statement shifts the market like no other. It either stalls the market into doing nothing, and we just had a brand new candle start um 30 minutes ago. So that's what we're going to be watching on the 1 hour and the 4 hour as we talk about this chart. And FOMC is literally happening right now. Okay, like today is FOMC. That's why I'm really talking about it. So if you think about, what shifts the market, there are multiple things that shift the market, and I'm gonna put up a different time frame. I'm gonna put up um, QQQ. I guess I didn't change the color on that yet. Oopsies. Because the left and right side have different settings actually. So I changed the left side to be red again, red and green, and my secondary side is still in blue and black. But the blue is calls and the black is puts, which means it's going down. Black means it's going down. So that's what we're going to be looking at, right? And so what happens is there's many things that shift the market. And, when Trump says something, the market may shift or move. When Jerome Powell says something, the market might shift or move. Same thing for FOMC. When the feds are cutting rates or changing interest rates or whatever they're doing, all that stuff that happens, simply put, it is going to either shift or stall the market. So if it's stalling, it's doing what it's doing now. It literally hasn't even moved. I mean, 24.4, 22.2. It moved $2.20 all day. It's been an hour in the market because it's 10:30 a.m. Eastern Standard Time. You can see the time down here on any of my charts when you watch my live recordings that are in my live section of my YouTube channel. But when you are looking at these, charts, the time is very important. So it's only an hour into market, which lets me know that if it's only moved $2.20 within the hour, that means that FOMC is kind of stalling the day. And it's essentially nobody is trying to buy, nobody's trying to sell, nobody's trying to do anything in the market because everybody is preparing for the news that may or may not shift the market. Now, if you're in a trade, right, it might turn in a different direction because of the shift that's about to come. So it's actually in your best interest to stay out. But if you are a day trader, that means that you would already, be taking something pretty quick. Maybe you're a scalper or maybe you're a swinger. You hold things overnight up to 6 or 7 months, right? And then after 6 or 7 months, that's really considered a deep swing. And then after that, it's considered leaping. So you're holding things from like overnight to 6 or 7 months long. And during that time, you want to make sure that your trade is going to go in your favor of what you want it to go in, right? You want to be in the right direction according to if you're buying calls or puts, right? But you don't know what's going to happen when the market shifts, so you really don't want to be in anything. And especially if you are a day trader and the market's not moving, you're not going to make any money anyways. So that's why personally I didn't trade. The 4 mentors that I have, none of them traded. Why? Because FOMC is happening at 2 p.m., I believe. I think it happens at 2 p.m. I'm going to check forexfactory.com FOMC statement. So today we have our federal funds rate, we have a FOMC economic projections, FOMC statement, and our FOMC press conference, which start at 2 p.m. and the press conference is at 2:30, right? And so what happens is that, whatever setup you may or may not have could literally not play out if it doesn't want to. Like, whatever you have going on as your typical strategy that you take can literally happen super, super quick or super, super slow or just really irregular. It really doesn't make sense to be trading during this time because, like, when the market is tricky or the market is confusing or the market is, just not stable, that's what makes it difficult to trade FOMC, not just because, oh, it's some news coming out and we're all scared and we're going to clutch our pearls and hide our wallets. It's more so that we don't know what's going to happen. So it's in our best interest to wait until after the statement happens and after the rates are established publicly and etc. to be able to place any trades. Now, what we're actually seeing on the 1 hour on our left side, this is both QQQ, right? They are both QQQ. This one is just has a different label because I changed the label for my left side and not my right side. So they're the same thing. I just wanted to point that out too. They are the same, just different time frames and different colors of the candles. All right, now that we've said that, we look like we're having a strong-ish push past our previous low. I mean, it literally sat here for an hour, and now within the first 30 minutes, it's moved more than well, not moved more, but it's on track to move more than it has all day. So maybe market volume is going to pick up. And this is our buy sell volume bars, right? So if this starts to pick up, our volume starts to pick up, then you could look to take something very, very careful. If your setup is popping up, my personal setup is gonna be, I explained it more in yesterday's video if you want the in-depth version, but more so a very quick overview is I love to trade ranges. So I trade rejections off of ranges. So the range that I was interested in, I place alarms at, and when those alarms go off, that is when I trade. So here we have an alarm at 6:36.80, and we have another alarm down here at 6:12.0. So if it hits this alarm, it'll notify to my email to come in and take some calls, or just to check to take some calls. And then here at 6:12, when that alarm goes off, that is when I would be interested in taking some calls, right? And the reason why it says 6:12 is, why does that even say 6:12? Or am I tripping? Why does that say 6:12? It's not even at 6:12, bro. I'm like, that doesn't sound right. I'm targeting 6:19.3. All right. The orange lines are where I'm targeting, and the alarms go on, like, are parallel to that. So I basically just lay them on top or something. Lay them on top or just close to the line, because if you lay them over, like exactly over, then it's hard to click on it. So that's why I put it a little bit above or a little bit below. And yeah, this one, that's right. I don't know why that alarm says 6:12 though. Let's change that. I didn't even notice that. So that's my personal strategy, right? So I'm gonna click on this little button and I'm gonna go, actually, no, I'm not gonna do that. Well, now we're getting a little bit of a push. But again, I'm still not interested until it crosses my 6:19. I'm like, why does that say 6:12? Let's go ahead and let's fix that up a little bit. So I'm gonna double click on that. It says 6:19. Maybe the label? Yeah, the label is wrong. Let's do that. Alrighty. So now it says 6:19. Well, it really should say 6:19, like 6:19.5. So I'm gonna double click on it again and put 6:19.5. Press save, and therefore it's not going to tweak out. So yeah. So now that I have my strategy, that's the strategy that I trade, right? And so when it comes down to this line, that's letting me know, hey, we have made it up. Again, if you want the in-depth on my strategy, yesterday's live is going to break it down more deeply. If you still have more questions, you can ask them down below. I just answer them in my next live. Cool. Excuse me. So when I hit this line, that's when I'm looking to be taking some puts into that next range. Okay. But the point is, FOMC can literally take my strategy that I trade, that I know is profitable, and turn it into some crazy whack type of tweaked out situation, because it can shift and shake the market like no other and drop 40 minutes in 1 second if it wants to, which is not something we normally see on a regular day. We only see those type of moves really associated with news. Now, they can happen anytime, but the thing is, anything can happen in the market, but that's not really predictable. What we can say is that over time, a lot of stuff has happened when the market has news, right? So we can know when news is happening, something may or may not shift. And that's something we can actually look at the time of these things that are happening at 2 p.m. Eastern Standard Time. And then at 2:30, there's a press conference for FOMC. And now we're officially pressing past our previous low quite with the volume. 40 minutes into our new 1 hour candle. And now we're starting to show on the 4 hour. I like to think of it like, not to be annoying, but like literally think of it like a pregnant woman, right? If she's pregnant for a few weeks, she's not going to show nothing. It's not going to matter, right? Nobody's going to be asking if she's pregnant or not. No one's going to be inquiring because she's going to look normal. But after 4 weeks, 5 weeks, 6 weeks, someone's like, hey, I'm starting to see a little formation of a circular stomach. So that's when you really can't even lie about it. You can't even really hide it. So when you start to go on the higher time frame, like the 4 hour on the right side, and you start to see that push actually come to fruition, right? Because this candle is a mix of the past 4 hours of market. So this current candle we have is a mix of everything that's happened today so far, right? We only get barely 1.5 candles on the 4 hour because it's 6 hours and 30 minutes total in the market every day from 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time, right? And so when we go up to the higher time frame and we start seeing these things happen and we start seeing it show, then we're like, ooh, let me actually pay attention. But if this candle looked the same as the 4 hour, as if the 4 hour candle continued to look the same as the 4 hour candles kept forming, then I'm like, okay, I don't care. Because again, like the lower time frames are going to exaggerate all the noise, they're going to exaggerate all the small movements, they're going to exaggerate all the things. But when you start to see it on the 4 hour and the 1 day, and you start to see these things form on a higher time frame, that's when you really are alarmed that like, hey, this thing is actually setting up in my favor. Because it's very often that you'll see a double bottom on the 5 second, and you go and look at another time frame, it's nowhere to be found. And so that's not smart to take because it's forming on a very small time frame. Same way as you can find a double bottom on the 15 minute, and then you look at the 1 hour, which is literally just one time frame up, right? With the typical standard time frames, you go from 15 to 1 hour. You go up to the 1 hour from the 15 and there's nothing there. You saw it on the 15, but there's nothing on the 1 hour. Okay, that means, hey, we're not really looking to take this. This is not really strong. But if you see a pattern on the 15 minute, 1 hour, 4 hour, 1 day, oh, you're golden because it's confirming across time frames. And so even if this is another side point, but even if you're looking at something on a lower time frame and it's not showing, like again, the example, you're seeing it on the 15 minute but not on the 1 hour, guess what? Now you kind of know, okay, I'm going to scalp this on the 15 minute because it's not going to confirm on the 1 hour. It's not going to go to full fruition and stay like this for an hour or stay like this for 3 or 4 15-minute candles, but it might stay like this for 15 or 30 minutes. So let me scalp it, right? And that's how you can go about your strategy instead of, and know when to let stuff go is like, okay, I see it on the 15 minute. That means I should be trading for a smaller amount of time. I'm not going to hold it for as long. I'm not going to try to push it for as long because it's not showing me that same setup on the higher time frame. All right. So it's just not best to trade on an FOMC day. Again, like I trade range breakouts. I trade range rejections, not range breakouts. So when people trade a range breakout, they're trading when it gets into this area, right? On the left side, you're trading when it gets into like anything down here, right? But me, I trade when it shows it's consolidating here and it bounces back into the gap. That's what I trade. So I don't trade when it leaves. I trade when it goes right back in. Okay, so that's just an example of what I do. And then also like to say the other side of the range, right? Because a range is like the part that you care about. So people would be trading here for a range breakout because it's breaking out of 636.6. But me, I'm waiting for price to come up and then I'm trading the rejection back down these $9 from 636 to 625. That's what I take. I take this part. Right? Whereas other traders are waiting for it to confirm breakthrough and they're taking that high all the way through, which I don't personally take because that's just not my strat. Okay. So the next thing is that the point is that the charts are literally unpredictable and untradeable. Okay, not even the word unpredictable. They're untradeable every single day. What I mean is most of the charts, most of the time, whatever ticker you're trading is going to be untradeable for a day trader. Why do I say that? Because the charts are not meant for day trading. They're meant for long-term investors. Majority of the money that's in these markets, the trillions of dollars that are circulating, are not for us. They're not for long-term investors. It just so happens that there is a way that we can make money on the short term by getting in and getting out, getting in and getting out daily or weekly or monthly or whatever you do for your day trading or your short-term trading. Whereas people are holding their stocks for 7, 8, 9, 10, 11, 12 months to a year, right? You're building your portfolio. Now, the point is that these markets are not really meant to benefit day traders. They're meant for long-term traders. So if you start to think about the charts being tradable every single day for you, well, then you're going to not be able to make money consistently because now you're in a habit of looking for ways to make money every single day when the market isn't technically made for you. Now, obviously, you can make money consistently, and I'll talk about that in the next point, actually. But the point is that the charts are literally not meant for trading, they're meant for long term investors. So, why do you think you'll be able to make significant money every single day? Why do you think you're going to be able to catch something every single day? Why do you think you're going to be able to catch a setup every single day? It's just not going to work like that in your favor. And so, personally, when I got out the mindset, and I'm still working on it, right? But I'm getting out of the mindset of, oh, yeah, I need to catch something every single day because it's not for me. This market is literally not even meant for me, right? It's something that I'm doing as a opportunity to take advantage of alongside investing long term. Something to do to make money on the upside and downside while my trades go long term, right? While I'm holding something long term in a portfolio. So the other thing is that if you think about a long term investor, they're holding through the lows, they're holding through the highs, they're holding through whatever. They're just continuously investing in their portfolio to grow it over time. But as a day trader, you're able to take advantage of the highs and the lows, whereas someone who's long term can't do that. So that's why it's actually great. Like, we're the only people that benefit from the market going lower. Like, and when I say benefit, I mean like obviously long-term investors benefit from it because that means that whatever low happens is going to help to build momentum to take it even higher, which gives you more money, obviously. But what I'm saying is like when the move is actually happening, we're the only ones that are actually making money, right? For them, it's setting up for to make more money, but for us, we can actually make money on that literal move to the downside. The next thing I want to talk about is that just by moving a few lines around, you can make your bias look like how you want it to look. So you can literally turn a bullish sentiment into a bearish sentiment just by moving around a few lines. So if you really think about it, that line we just saw come down, or that candle we just saw come down, now it's completely wicked to the upside, whereas it was just moving more than the last hour moved. It moved that much in 35 minutes. But guess what? That move that we just saw is so much, it just looked so bearish, like it was just going to come down here and just keep going. But look at it now. It's literally squeezing all the way up. And if we look on the 4-hour, it's literally still just in this consolidation zone, right? Literally in this consolidation zone here. So what does that mean? That means that we really shouldn't even be touching any of these charts because it's not even holding a specific direction for a long enough time to be able to take a proper trade. And the same thing another point to go along with this point is that, you can make money every single day. This is what I was saying earlier. Like when it comes to consistency, you can make money every single day. I've done it. I've made money 4 weeks in a row. Every single trading day for the month came out green. I've been there. I've done that. But guess what? It takes a specific type of market that is benefiting the day trader. And that's not going to happen all the time. And so when you forget that this market is made for long-term investors, then you feel invincible because you're like, oh, I'm making money every single day. Let me go ahead and keep doing what I'm doing. Boom. Now you're full boarding, which means you're putting everything into a trade at the beginning. You're not even scaling in. You're not adding contracts. You're not having a risk management. You're just tossing in your whole account and just, literally living off ego. And it works for a while, especially after you have learned trading and you know how the charts move and you've been trading the same stock and trading the same ticker. You know how it moves. And so it works for a while, and it indeed does work. I have been there, I have the receipts, but it doesn't work long term because you start to feel invincible and you start over leveraging and you forget that you're in a market that's not even made for you. And so you might go a month making green every single day, and then you might go a month making red every single trade. And now what? Because you've been over leveraging, you kept forgetting where you were at. You kept ignoring your strategies, kept ignoring your rules, but you're making money the whole time. Now you have all these bad habits. And now you're going to ruin your account by enforcing those same bad habits that were once making you money. So you forget that you're not supposed to be making money every single day. You can. Let me be clear. You can make money every single day. It's absolutely possible. A little 0.5%, a 0.2%, a little 1%. Oh, you can make that any day of the week, regardless of the price action. You just got to pick a stock that's going to give you, enough of a move, but it's not going to be A plus. And you're going to really, really feel invincible. And you're not like, you forget that you're not supposed to be making money every single day. You get accustomed to taking money out every single day, which means like making a trade and going green. You get accustomed to being able to be green every single day. So that's what you start to focus on. You start to focus on, oh, I got to be green, got to be green, got to be green. Because everything you focus on is what you're going to do. And what you're focusing on in this case becomes your force. You're forcing it. You're forcing a green trade every single day because you're focused on getting green, because you have forgotten that you're not supposed to be making money every single day. So then what you focus on is going to take control. And that's what you're going to keep doing. So now you're not even looking for a market bias. You're literally making the market fit your bias. Like, look at this candle here. Then it might still come and push down. But guess what? What does that have to do with my strategy and the bias I set down here at 619.5? What does that have to do with me? It doesn't have anything to do with me. It might be pushing the strongest, but I'm not entering until it hits my alarm. So I had to get out of the mindset that I'm supposed to be taking money out every single day just because I can. I can. That doesn't mean that's the best way to do it. So if you think about it with your fitness plan, you can eat like trash and look good. You can eat fast food a few days a week and look good. But guess what? no personal trainer is going to advise you to do that, because you're going to have to be working harder. You're going to end up working out more than you need to. You're going to end up exhausting yourself mentally and physically to try to keep up with this bad habit you have. When if you just followed what the man told you, or followed what the woman told you, whoever your personal trainer is, they're telling you, hey, wait till your alarm hits. They're telling you, hey, do XYZ, and that's all you need to do. But you're so focused on, oh wow, I want to live the lifestyle I want to live. I want to eat what I want to eat. I want to do what I want to do. I want to blah blah. And it's just making your life harder. So losing is definitely normal, but if you're over leveraging, now you're losing a lot of your account. So when you are, again, you're out of the mindset that you're not supposed to be making money every single day. You're outside of that. You're in la la land, right? It's gonna work for a while. I'm telling you it is, because it worked for me for a while. Um, but losing is normal. So when it comes back around to a market that is slow, or there's FOMC, or it's just moving very weirdly, or it's not hitting your, because this should have been hit at least an hour ago. I mean, it's literally from where we opened today is literally only $4. That should have been hit like yesterday. But again, like, I'm reinforcing good habits within myself. And even though this looks super strong, I must do my due diligence and say, hey, I'm holding out on doing the thing that I feel like doing, because I know it's going to pay off when I reinforce really, really good habits instead of doing the thing that's working. Because I'm telling you, you can make money every single day. Right now, I could be fully into some puts, and it's probably going to go down a few more cents. And then I can, or maybe even just to hear, that's all I need, a little 60-cent gap from point 0.7 to point 0.6. Oh, yeah. That little, yeah, bruh. Yo, that's nice, but that's not what I'm trying to build. And so I have to consciously choose against it. And yeah, like, losing is normal again. So if you're always over leveraging, you forget where you're at, you have all these things going on in your head where you forget you're not supposed to be taking money out every day. You forget that the market really isn't made for you. And you forget that there are going to be times where the market is recalibrating and resetting itself. And, you need to proceed with caution, and you forget that this is literally you putting your own capital in, and you putting risk on the line. Then when you do lose, because losing is normal, it's inevitable, when you do lose, now you're losing worse than you should have. So the habit that I want to create is, hey, every time I lose, it doesn't matter what market is happening, my losses are consistent, because I am not in the mindset of being in the clouds of, oh, I'm such a great trader, oh, I know exactly how to recharge. All those things are true. All those things are true, but my habits need to match everything else in my life, right? Including my trading. So the next thing is that early entries on FOMC are not only premature, they're also immature. They're not only premature, they're also immature. Because when you take moves really, really early, like jumping into something here on this first candle here when it dropped down, that would have been a really premature move, because you're saying, oh, FOMC means it's going to drop super, super low today because it opened up really, really low. I'm going to trade the market open. And you would have literally been out of every single dollar you put in, and you probably scaled in too, because you felt like you were invincible. So you scaled in probably, and now you're out of your money. So not only was it a premature move, now it's an immature move, because when you take a move early, you're really just trying to jump in because you're desperate to make money. And because we never even really came below it. And again, like, it's been more than an hour since it came here. It literally, like, came down and then shrunk here like forever, which was almost an hour 30 minutes ago. So now you would finally be coming out of profit, but because of time decay, your contract would have probably been worthless by now. So it's important that you remember, like, early entries you don't really get a award for early entries. You only get an award for the results that you're able to produce, and you also don't get an award for money, because you can make money by sloppily trading. You can make money by just having a lot of money in your account. You can make a lot of money by just making stuff up as you go and trading all 15 strategies that you know of. But I am interested in going to that consistency And right now, like, this is something great. Like, I used to trade like this. Like, when there's a rejection, I would trade to the next key level, right? So I would trade this to here. But sometimes it works, sometimes it doesn't because of the volatility. So I have to switch my strategy to what actually benefits me long term. And this certain trade wouldn't be benefiting me, so I'm not even in there. So, one thing that I've noticed, moving on to the next topic, the one thing I've noticed by recommitting myself back to having a mentor is that there's a lot of pride and ego that I had that they don't. Like, when there's nothing in the market, they close their laptop and mind their business. Like, they are off the charts. And so it really has exposed in me how much I really want to force a daily win because I got so used to making money every single day because it works. I'm telling you, it works. It works. And that's the part. Like, it sucks even more when it's working because it's just because it's working doesn't mean it's the best way to do it. Right. And so I could question trading as a whole and say, oh my gosh, trading is a scam, trading is gambling, blah, blah, blah. No, it's because I am treating it in the wrong way. And that's why I'm seeing the losses that I'm seeing. So when I am able to stop, pause, and fix what I have going on mentally and psychologically, then I can actually not even have to force myself to make a daily win because I'm thinking about it the right way. I have the right mindset going into trading. So we're watching this push down. It looks like it's gonna start jumping a little bit. We see our volume bar really start to pick up a little bit of speed here. Pick up a little bit of speed here. Okay, so we're still watching. Still watching. Still watching. But yeah, that's something that I noticed. Next thing I want to talk about is that Dave Ramsey. I saw a little. This is why I have to stop clicking on stuff, just being out of curiosity and wanting to click on stuff because I gotta stop clicking on stuff. Dave Ramsey was talking about day trading, and obviously, like, I've watched a Dave Ramsey video or two, and so YouTube is suggesting his content, and he made a short about day trading, and so I watched it because I'm nosy, and I partially agree with what he said. He said, "Don't try day trading." Because most people are going to fail. It's literally just a bunch of people that think they're smart enough to beat the market. And I partially agree. A small percentage of the winners is people who are, oh, well, I was going to say, like, there's a small percentage of people that do win. And the small percentage of people that do win are not trying to beat the market. That's why they win. But the part that I agree with is that, yes, majority of people are going to fail because the majority of people are trying to beat the market. When you stop trying to beat the market, that's when you become consistent. And I've had that mentally in my journey where I wasn't even caring about the journey. Oh, I wasn't even caring about the market, wasn't caring about making money. I wasn't trying to beat the market, wasn't trying to be the best, didn't have an ego, didn't have all this pride, didn't have as much knowledge. So it was a lot of just ignorance of the possibility of trading. And so, just doing it out of pure love for the game and pure desire to learn something new and not really knowing how it works. But honestly, the ones that are consistent are the ones that don't try to beat the market. They actually don't want any beef with the market. They actually say, bro, you got it. Market, you got it. I'm not trying to beat you, right? I'll see you tomorrow. Hey, I'm not even trying to have no smoke. That's the people that are really consistent and profitable. And I've had a taste of that. So I can testify that that is true. But the majority of people are trying to beat the market because that's like the default mindset. When you're putting money on the line and your body is like, okay, like, why not just spend the money instead of put it in the market? Why try to make a better life? Why try to learn a skill that may be kind of difficult? Why learn a skill that might take you 2 or 3 years to really, see results from? Why do that, right? Your body is like, bro, stop doing that. And then you start to try to beat the market. That's what happens to most people because that's the normal reaction. The normal reaction is, hey, I need to make money from this. So that's what the majority of people get. They get the mindset of someone who's trying to beat the market because that's what most people are trying to do as a default. So when you're trying to beat the market, you're literally ignoring all the red flags of the wrong habits you have, and you're jumping in early. You're like right now, I'm like $2.20 away from my entry, but right now, like in the past, I would have been jumping in right now. Why? Because I would have been like, hey, it's obviously going to go to my line. I know there's 25 minutes left on this candle, but let's just go ahead and jump in, right? That's a red flag habit. Why would I be doing that? It's not something I'd want to continue doing, but it's something I'm okay doing just one time. Nah, it's never going to happen just one time. You're going to keep repeating that action whenever you need to pull it out because you've already done it. So you're reinforcing these bad habits. And so now that you've ignored the red flag behavior, you're just hoping that the next green money that you make or the next profitable trade you make is going to help you to ignore the red flag habits you have. That's literally all that's happening. Every time you make money, you're basically saying, hey, all the bad habits I have don't matter. And so that's what I've noticed within myself. And that's why I have completely decided to recommit myself to mentorship, because everybody should have a mentor. Everybody should have somebody that's ahead of them who can keep them on the straight and narrow, and who has already done what they want them to do. And my mentors have mentors. Like anybody I learn from is also learning from someone else. Everybody should be learning from someone who's doing better than them, because that's where your ego really goes to die, is when you're willing to learn from someone else. Um, the next thing is one update from yesterday's live video. The video I posted just before this one is that, I wanted to add that I shouldn't be trading if the people who I learned from aren't trading. Because yesterday, like FOMC, I know better, okay? Because when I first started trading, there was FOMC like a week or two later, and I ended up making a lot of money from it. I think I made like 1.3 or maybe 1.2 K in about like 5 minutes or something like that. Like I did really well on my FOMC, and I even would have done better because that was the year that it dropped $30 or $35 in that same day. $35 of movement? Yeah, bro. That would have been crazy. But I didn't know. I didn't really know what FOMC was. I just took advantage of the volatility it had pre-market. But the one thing I wanted to share is that, like, especially if you don't understand what they're doing, is especially when I should be following it. So that's the one thing from yesterday that I want to add to that video, because people who have gotten past my current challenges are doing stuff that I don't understand yet, because I still have the challenges. So I need to be following and seeking to be more understanding of exactly why they're doing what they're doing, and following it even if I don't understand it and I don't have that full understanding or confirmation of like why they're sitting out yet. I should still do it because it's forming a good habit even when I'm not all the way like there with my understanding, because they understand something that I don't yet, and I will understand it when I do the right things. So my channel also has every beginner video you need to start trading. So if you check out my playlist, you can find how to place your first profitable trade, how to read a chart. Go ahead and check those out. They're very helpful, and they shave months off of your frustration and figuring out how to first place profitable trade by yourself. I'm telling you, just watch the free videos on the channel, because they're going to save you a lot of time, and they would have saved me a lot of time if somebody would have just told me those things up front. So the other crazy thing I was doing is that I was watching a lot of content that was not helping me make any money with trading. It's kind of like a life lesson that I learned the hard way. But in reality, like if there's a thing or content that you're consuming that does not directly affect how you're progressing and it's not helping you progress, like you are doing yourself a major disservice. I was watching so much content before I decided to recommit myself to mentorship. I was getting so much dopamine off of other like Christian content creators, other Christian people that just like really love entrepreneurship and business owners, and just other things like that, because they are the same mindset. But just because they're the same mindset, which is where the dopamine comes from, you're like excited and happy to watch these people's content, but really you need to be watching people that are directly going to affect your progression in the thing you want to progress in. So I am trying to progress in trading. Why am I watching general business advice? Why am I watching general people I love? Why am I watching general, entrepreneurship stories about all the no, I need to be locked in to understanding trading. That's what I needed to be doing. So that's why I had to have a very honest conversation with myself and say, I'm doing myself a very big disservice. Every single day goes by, I am not progressing in the thing I need to progress in and the thing I keep trying to do, but I'm doing it on my own while watching all these like content creators, and I just need to stop. Like, I really need to stop because I need to focus on what I want to progress in. So now I feel like I've cut some of that noise back, and I've been able to do myself a major service by uh, getting mentorship and committing myself back to mentorship. So now we're going to give you, or I'm going to give you, the things that I'm watching for next week and the 2 mindset shifts. And that'll be it for this video. So, all right, because we're going down the list. So the first thing we're watching for next week, let's just go ahead and show you what I'm watching for next week. And it looks like NQ has my alert. So I'm going to do, let me see what NQ look like. I think NQ might be dropping more. Oof. So this is my alert for NQ for kind of the same thing as here, but NQ is moving a little bit more sharply. And like, well, this is a new 1 hour candle because 11. Oh, yeah, it's something like it's 11:10. That's incorrect. Yeah, this is delayed data, which is fine, because I don't trade futures, so I don't really need the updated data. But I was like, yeah, I mean, this is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Like, it's been rejecting off of this for forever, and so this would be a nice resistance to take. So I just wanted to have an alert for when that happened and how far it dropped, and just keeping tabs on that because NQ and QQQ both follow Nasdaq, or they both follow Nasdaq, but NQ does move a little bit differently. Especially, you'll see them not mirror each other as much during a lot of economic news as well. So, anyways, let's go back to QQQ and we're gonna go look at what we're looking at this week. So I'm actually just going to pull up one chart just so this is kind of out the way. So I'm going to put it back here and show you exactly what we're looking at this week, exact levels that we care about. So obviously our all-time high is still here at 636.5 is what we're looking at. I still really like this 626.6, but the thing about it is we invalidated it 2 other times and then we rejected, but I do like it again because we did reject off of it here. So let me zoom in a little bit more. So what I'm essentially saying here is, hey, where are these boundaries that I really like? And boundaries are essentially your support and resistances. So what are lines that have more than 2 touches of some support or some resistance, right? And so there was a resistance here, resistance here, resistance here. I'd count that as resistance because it was a flat top and it just completely dropped down. So that price movement is showing me, hey, it did reject, right? Something like here, I wouldn't technically count that because it didn't go up as well, right? They both didn't, but it didn't hit completely, but it didn't really have a strong push down. But I would consider, especially because it just bounced right back up, right? But this really pretty much dropped, consolidated, and just slammed down. So I would consider this to be a rejection. So it's 1, 2, 3, and then not really that. And then I would consider this one just because it fell, but it did come back up. I wouldn't really consider it either. So that's 1, 2, 3. That's more than 2, right? I'm looking for 2 pushes. It dropped 3. So I would still consider that a nice little push. If we come above it, I would only really still be looking for my 636 to pass my all-time high, only because it was a lot of choppiness in this zone. There was not a lot of straight throughput. Now, if you look at something like this gap here, this was straight throughput. Very clean candles, straight through. Nothing here, straight through. Nothing here, barely wicked above. And this was straight through, drop down, straight through. So it's very clean in this gap, very, very clean in this gap. right? And all the stuff up here, this was all like gapping to the upside, which is actually great. Like over Friday, over Monday, over like basically the end of the week to the beginning of the next trading week, just rode itself all the way up with gaps. That's beautiful. Like, because that's showing me that it doesn't even want to stay low. It's like, hey, I want to get up there really fast. And I don't even want to take my time. I just want to skip, right? That's amazing. And so, yeah, we're not looking at the pre-market, any pre-market prices here, but we're going to assume that these gaps between Monday and Friday are probably pre-market gaps, right? Okay. Like here, right? You can just tell, like, this is definitely Friday to Monday because it is a gap. Look here, Friday to Monday, because it's another gap here. You can just tell over time without needing to have your pre-market gaps on the backside. So, and to put your pre-market gaps on, you click on the little thing at here, and you're going to change this from regular to extended, the session. And so then you'll be able to see, like, literally, okay, this was Monday, Friday, Monday, it price gapped here. Like, you'll be able to really see it, right? But I don't want to use that because I've been looking at this for too long to even be looking at that right now. Yeah, so that's the first thing. We're still looking at an all-time high. I don't care if it really comes up to 226.6 because yes, it did reject 3 times, but I don't really, it's not strong enough for me to really care about it. So now to the downside, what are we really looking at? I would really love to come down to the 608. I think that we could definitely close the 618 to 613. That would be a really nice trade to take, but I really am interested in the 608 because that's the end of this gap. And if we came to 608, I don't know what we do. So I'm interested in watching this 608 too. So I'm still watching the 619 because I like the 619 gap between 619 and 612, especially because my new strategy, I only trade ranges that are over $2. Now, if you look at this range here, this is 623 to 625. It's barely $2. So it doesn't make sense for me to trade anything in there. But something like here, 619 to 612, that's a nice little gapiana. So what is that, $7? So that's more than enough for me to, be able to trade that. So that's what we're looking at for next week. Now, the two mindsets that and today is December 10th, so the next week is going to be December 15th to the 19th. All right, 2025. So the two mindsets is, number one, I got to get more bored than I currently am. I am so bored with the market not giving me anything that I just been placing really random trades, and the fact that I'm placing random trades means I'm not bored enough. Like, I understand I'm supposed to be bored, but I haven't fully accepted the fact that I gotta really, really be bored with this, right? And so, number one, the mindset I'm carrying into next week is I gotta get super duper more bored than I currently am. And like, even look at this, it just rejected straight up. I would have jumped into this and would have been out all my money because it shrunk again, shrunk twice. Y'all saw it. We were watching it this whole time together. We saw it shrink twice. Right? Even though it's supposed to hit this, we're not jumping in and guessing. We're not doing all that guessimitation. We're not doing none of that. So, anyways, yeah, I got to get more bored than I am because I'm already bored, but I got to get like 10x bored than I currently am. I just got to get used to not taking trades for a week or a week and a half. Oh, NQ just shrunk back up for sure. Let's go look. Because I'm getting the alerts in the corner, by the way. That's why. Yeah, it shrunk back up because it hit the alert again. And so if it was down here, that means that if it shrunk down here, that means, or if it came down, if it pushed through this gap and it told me, hey, alert's going off, it pushed through this, I said gap, I meant alert. So if it's coming through this alert and it's telling me, hey, I pushed through this alert and it came down here, but I get the alert again, that means that it's also passing through again, which means that it came back up. Because if it kept going down, I'd never see this alert again because it would be far away. It would be down here. No way this alert can go off if it's all the way down here. So it just lets me know that it came back up. And so that's how I like using my alarms. And so that's literally the alarms. Like, they come to my email as well. And so these are the same alarms that I have here, right? And the same alarm I have here. They'll pop up in the corner, but they'll also email to me so that I can be able to know what's happening. And then so when it comes back through my gap, I keep saying gap. When it comes back through my alarm, I can say, oh my gosh, I am now being shrunk out of my position, because I can just know, because I got the alert twice. So yeah, that's the first thing is just being really going back to what we were talking about, being really bored, and I got to be okay with it, and I really have to accept it a lot more as I advance, because I'm never, like, last December was really really good. Last December FOMC was delicious. Last year Christmas Eve, amazing. Last year day after Christmas, amazing. Everything up to New Year's, perfect. But guess what? As I advance, I have to make sure I remember it. Just because December has been good to me before, it doesn't mean it's going to be good. It could literally be flat all December. So I have to be okay with that as I advance. And so the second thing is I have to be willing to put a stop to my madness. And which is especially hard if what I've been doing has been working. But it's worth it to try something new. It really is. It's worth it to try something new and not jump in and chase this candle. It's really worth it to set my boundaries at specific numbers and do not enter until it hits that, right? It's worth it to make sure I'm not being so subjective with this trading stuff. So even in my case, this means doing something new means not using any money at all. I've actually cleared out my trading account, and I have only dedicated myself to paper trading. Why? Because I'm so used to making money every single day, I have to literally wash myself and cleanse myself of this madness of making money every single day. So I'm basically taking a whole bunch of days where I know I could make money, or possibility of making money, because I know that the habits that I have, that the habits that I want to basically conjure up, are more important than me just making money. So it's so nice to hold a different habit and then have my mentors be like, yep, that was the right thing to do, and I'm better off in the long term. Because what often happens is I'll hold the normal habit, like chasing a candle or something like that, like something here, chasing this candle, instead of waiting for my entry under my alarm, waiting for my alarm to go off and it going under my alarm, and then me waiting to take that rejection. What happens is that and then again, like it's gonna reject off of here, and then it's gonna go into my next gap. So it's not just, so sometimes the break of a gap, or I love the word gap, obviously, the break of a range is also going into another range. So it's only really a breakout if there's no other range. But because all these ranges are stacked on top of each other, like, it only is a breakout that I wouldn't take if it is somewhere too close together, right? Or somewhere above a break, like a all-time high, like here, taking something up here. But uh all these are stacked together. Like, all of these boundaries are stacked together, and I will take any of them. So I have to also, when something happens, something is going to the alarm, I have to still check if it's a good trade to be taking. And so I am literally getting addicted to reinforcing good habits. That is what I'm doing all 2026. Because honestly, I've made money. I would have made money today, because I would have just taken this gap down when it pushed strong for that 70 cents or whatever it did, and ended up going like 40 cents. Yeah, like, no, it went like 60 cents. So I said it would go 70, it went 60. I would have taken that 60-cent push, because you really don't need much when you have a lot of money in your account, or a decent amount of money in your account. You don't need much of a push. So I would have taken that push, I would have made money, and I would have been reinforcing bad habits. But right now, I'm addicted to reinforcing good habits, which is why I'm not even trading real money. Because there's no dopamine for entering a trade if money's not even real. Because I could have entered this if I had real money in my account, right? Like I said, I cleared out my account. If I had real money in my account, then I would have entered this trade, because I would have got a dopamine hit to get that money from that 60 cent push. But I know when I enter on paper, it's not going to give me no real money anyways. So there's no dopamine push, then there's no dopamine hit, there's no reason to be doing it. So guess what? I could enter, but I don't, because that's part of me reinforcing good habits. That's why I'm not using real money, because I would have entered if I had real money in my account. But because I decided to take the really hard step, and I almost went and canceled the transfer. I almost went and canceled the 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 transfer out of my account, because I'm like, dang, I actually want some money in there. So what if a move come? What if that's the thing that be killing me? What if? What if something happens? What if it slams $30 and I don't have any money in there to take it? What if? What if? That's what's been keeping me locked in bad habits for a very long time. And now I'm over it. Now I've been exposed. Now I don't want to reinforce bad habits anymore because I would have made money. But guess what? That's not sustainable long term. And if I'm going to be honest with myself and really be honest of how I feel towards trading, I'm not interested in doing anything else with my life. So if I feel that serious about it, I need to take it that serious. And that's why I'm moving in this direction. Because there's a lot that I want to clean up under the surface. There's a lot of habits, like the urge to take a candle when there's literally no trades. Like like I said in the beginning, this market is not even made for day traders. We're just in here taking advantage of the fact that people that do long term are gonna have some pullbacks in their trades. They're gonna have these red days. They're gonna have like these big red candles, and we could take advantage of those things to make money alongside our long-term investments. But guess what? Every habit, every bad habit is a gateway drug, and every good habit is a gateway drug. So today, I feel so energized and amazed that I took no trade here because it never hit my entry to take into this next boundary or to bounce off, right? Because once it hits, that just means I'm now looking at it. When it hits, that means I'm now paying attention to something. It may have just came through here and I didn't feel like taking it. Or maybe it came through here and it pushed with volatility and I took it because it's still a boundary, right? They're stacked on top of each other. But it also could have just rejected up here and hit this 525 and I would have still taken it if it had volatility, right? By reading the candles. That's a whole different topic for another day. But that's a gateway drug too. That was a dopamine hit. Like, oh my gosh, you held that and you didn't lose any money? You held out on wanting to take this trade? What? Like, oh my gosh, okay, girl. Like, I see you. That's the type of thing I'm trying to reinforce in myself. And so that is a gateway drug too. So now I'm more likely to follow more rules because if I keep following the rules back to back to back to back, I'm going to fall in love with it and get addicted to doing that. But see, same thing. If you go and you follow all these bad habits like chasing a trade and then you make money from it, oh no. Now you're stuck because every time you see a candle you want to chase, you're going to chase it because you know money can come from it. And now you've reinforced bad habits, especially hard to kill those when you are making money. When you consistently make money every single day, but you're doing it through having bad habits that don't really sustain you long term, as someone that wants to do this forever, hey, that's really a bad place to be in. So it's all about the bias that, well, it's not about the bias. That was a different point. But all I'm saying is that whatever gateway drug you have is going to keep justifying itself on your, as long as you let it, it's going to keep justifying itself. So every time I take a candle that I'm chasing before it even hits what I wanted it to hit, and I just take that 60-second push, or that 60-cent push, sorry, and I just take the money from it because I know I can make money from it because I know a little bit too much. You just get to a point where you know a little too much, like, dang, like, I'm not going to take this trade even though I know what it can do, right? Because I would just keep justifying it. Well, last time I chased a candle, I made money. So why wouldn't I do it this time, and that time, and that time, and this time, and this time, and repeat it? You're just going to keep justifying it. But guess what? Now, tomorrow when I show up, I can say, well, yesterday I sat on my hands when it didn't hit my key level. Why can't I do that today? Boom. I'm justifying something in my favor. And either way, it builds a dopamine response. So either you keep having bad habits and you keep building that dopamine response to bad things, or you switch to having good habits and you let that build a dopamine response. That's going to keep you long term. You know how hard it is to get up in the morning and go to the gym and do 5 miles every single morning and hit 10K, over 10K steps a day? You know how hard that is? But you know how good it feels when you've done it for a week, 2 week, 3 week, and you are seeing the results and now you have the body you want. You don't want to stop. Why? Because you got over the hump of, dang, I'm doing all this work and I'm not seeing anything from it. When you start to justify your good habits over and over and over, and then you actually see the fruit of your labor and the results of you justifying the good thing, you're not going to want to stop. And so that's what I'm interested in, right? I'm eventually going to stop chasing so many trades and make really, really good trades that I'm never going to want to stop following my rules. And that is what I'm interested in. I'm not interested in these 60 cents, but I could do those all day long. Who cares? I want to do the sustainable thing. So when I first started waking up in the morning to go to the gym, not because I had to wake up early, but one, because the Bible in Proverbs, when I was reading it, it says that those who are going to be in poverty like to sleep, and they like to fold their hands and lay on, like, like fold your hands and lay your head to sleep. Yeah, that's what people in poverty like to do. So that's why I stopped sleeping in, first of all. I don't remember what verse it is, but it definitely is in there because I read it and I ain't woke up late since. But I would, want to get up early because I don't have time to do it any other time of the day. It's so easy to get up 2 hours earlier, knock out 60 or 70% of the steps, and then throughout the rest of the day, the 10K naturally comes, right? Knock out 5 miles in the morning, knock out 4 miles in the morning, then it's going to naturally come through the rest of the day. But the reason why it's now easy and now I'm happy and now I'm happy to do it, now I don't have to really justify myself to lay in bed all morning, is because I see the fruit of my labor. I see the result. But it was very difficult to do it at first because I didn't see any result. I didn't see the body that I wanted. I didn't see, like, my personal trainer told me to do. I'm like, he told me to do it for the specific result that I wanted. He was like, go and do 10K steps a day. I'm telling you, right? And I'm like, bro, I'm not seeing. I didn't see the results, but I kept doing it. I'm like, if he's telling me to do it and he's certified, then I might as well. But now I'm so happy. I would never stop doing it because I know that it works and it's sustainable and it's healthy and I'm happier. So that's the same thing with trading. Like, I have to get to a point where my gateway drug is the good habit. My gateway drug is the waking up in the morning because I know how good it can be for me, right? Instead of it being chasing that candle, enforcing a bias is gonna, like, instead of it being those bad habits, it's gonna be a great habit where I just sit on my hands for a week and I don't take a trade for a week, not because I'm running from the market, not because I'm not looking at it, not because I'm scared, not because I have no money in the market and I don't want to trade because I don't got no money in it. No, it's really going to be because I'm wanting to follow my rules and I'm back to that consistency that I had, that I've tasted before, where I'm not trying to beat the market. I just am making money off the market because that's just what's happening as a natural result, right? And look at this, like, even stalling, like, it's just not even doing anything. This was not a good day to be trading at all. Um, and so yeah, so you know, and the thing about the gateway drug is that at first it's going to be chasing a candle. Then it's going to be forcing a bias. Then it's going to be taking 5 different trades and 15 different strategies in a day. Then it's going to be continuously blowing your account. Then it's going to be 2 months of a losing streak where you're just constantly feeding money into your account. Like, no, you don't have to go that far. So, yes, I'll make money by not following the rules and justifying these gateway drugs that are negatively impacting me. But it isn't enough for me anymore. Making money is not enough for me anymore. Making money is not enough for, making money is not enough for me to be disregarding my rules anymore. It's just not enough. Making money should be a byproduct of doing what I'm supposed to be doing. So